Hi friends, welcome to A to Z Learning channel. In this video, we will be covering another results. HDFC Bank has just announced their quarterly results for the quarter ending 31st December 2021. And in this video, we will help you understand and assess how those results are. We'll of course focus only on the key highlights of the results, and most importantly, will help you understand what could be the way forward, how well the results are, whether they are in line with market expectations or are different. So it's an important video if you're interested in HDFC Bank. So please stay with us until end of the video. If you think we are doing a good job and if you like the content, once you have fully kind of watched the video, we would appreciate, don't forget to press the like button. And if you've not subscribed our channel A to Z Learning as yet, then please do subscribe and become part of our viewers family. So once again, please do not forget to press the like button. If you, of course, press the like button only if you like the content. After you have fully watched our video and you like our content, then only press the like button. But if you've liked, then please don't forget to press the like button. So it's very important for us to know how are you finding our content. And of course, if you have any suggestions, any improvement, comments, then please do let us know those as well, because we want to make sure that our content is fit for purpose and our content is properly enjoyed by our viewers. So without any further delay, let's start our video. HDFC Bank is the most important private bank in Indian financial system. In fact, I would say it's the most important bank in the Indian financial system. Its results will set the tone what can we expect from some of the other banks. So let's quickly go through the key highlights of the results so that we get to know how well the bank is performing. Bank has gone through many changes recently. For example, the new CEO, uh, which was after a very, very long time, Mr. Adequacy left and new CEO has come on board. And more importantly, last year was full of surprises for HDFC Bank, given they had a number of issues with their digital IT platform. Even RBI kind of barred them uh, to kind of sell new credit cards for almost few months until they fix their kind of IT issues. So it had its fair share of ups and downs last year. So let's kind of look at how the year has ended, how the calendar year has ended for HDFC Bank. Net profits are up 18% year on year, so solid performance. Net interest margin is the key kind of barometer for any banking organization to know. So any net interest margin which is 3% or higher than that is considered very good in the banking business. HDFC Bank, as you would expect, given they are the solid bank, they are the most, I guess, over the long term, they have been highly performing kind of bank. Their net interest margin is 4.1%, which has grown 13% year on year. So another solid performance there. CASA ratio, current account and saving account. CASA, the current account and saving accounts are the cheapest way for bank to get the deposits, which then they use to lend money to make money. CASA ratio, again, the general thumb rule is that if CASA ratio is below 35% for any bank, then the bank is struggling to attract the deposits, struggling to attract the retail participation, and that's kind of negative. HDFC Bank is continuously growing. It has upped its CASA ratio 13.8% year on year, and it's currently at 47.1%. So if you think about the thumb rule of 35% being good, CASA ratio of 47% or little over 47% will be considered outstanding. So HDFC Bank has done well there too. Capital adequacy ratio. So it's very important for bank to maintain the right level of capital. Again, as a thumb rule, RBI or thumb rule is that about 12% anything that is less than 12% capital adequacy ratio is considered negative in a banking context. HDFC Bank has got a solid number there. Their capital adequacy ratio is 19.5%, which was 18.9% in last December. So year on year, it's up. It's up 0.6%. So overall, there is absolutely nothing that kind of stands to kind of raise any eyebrow in terms of HDFC Bank's results. Last but not least, net non-performing assets. Banks are in the business of lending money to the customers, and sometimes customers struggle to pay that money back, and that is called non-performing assets. There are kind of well-defined rules set out for every bank to follow, and they are expected to report gross NPA and net NPA. So from a gross NPA perspective, the performance of the bank is improving. Their current gross NPA as at 31st December 2021 is 1.26%, which is a lot lower than what was the case last year. Last year it was 1.38%. Even if I look at quarter on quarter, in the September quarter, September 21 quarter, the gross NPA for HDFC Bank was 1.35%, and now it is down to 1.26%. So overall, bank's quality of asset is continue to improve. It's at a very good level. And net NPA on the basis of the HDFC Bank currently stands at 0.37%, and their total provisions are at 100 and whopping 172% of gross NPA as at 31st December 21. So looking at the quality of asset as measured by non-performing asset, if I pick up the number of net NPA, which is 0.37% for HDFC Bank, any number which is less than 1% is considered good. 0.37% again put HDFC Bank in exceptional category, outstanding category. So there is absolutely no doubt. So overall, if I look at the five kind of key parameters on which the bank should be assessed, whether it's net profit, net interest margin, CASA ratios, capital adequacy ratio, or non-performing assets, bank has performed really well. Overall, this quarter has improved their performance year on year. They continue to deliver solid growth. So overall, there's absolutely nothing that stands out that is negative. The overall, as I said, it's very important to know whether the results, how the results are, because analysts had expectations, market had expectations from HDFC Bank. Broadly speaking, all the results are absolutely in line with expectations. And that sort of leads us to the final question that you will have as a investor or potential investor in HDFC Bank is, what's the way forward? If I look at the way forward, I think first of all, it's very important to look at how well the bank has done over the course of 2021. 2021 was not their star year. I think in few years' time, when they look back, they'll probably look back at 21 with not great proud, because they were penalized by RBI. They had ban. They had embargo to sell new credit cards because of their IT infrastructure. IT infrastructure was failing, but they have bounced back. They have kind of fixed those issues. If I look at their stock performance, price performance, I think this is after a very long time, HDFC Bank over the last calendar year delivered a return. So if you look at 1 year return of HDFC Bank, it's much lower than what the Nifty has given, what some of the other banks have given. So usually HDFC Bank tend to deliver better than Nifty return. Nifty over the last year delivered close to 24% return, whereas HDFC Bank, on the other hand, has given 1 year return of only 5%. So it is, from a stock price perspective, it is at its probably bottom. It can't get any worse. And this solid performance on the financial metrics seem to suggest that the way forward has to be better than what they have seen, better than 2021. The other thing that kind of impacts HDFC Bank particularly is the FII participation from October onwards, October 21 onwards. FIIs have been net sellers in Indian market. And the January performance is no different. On a net basis, in 2 weeks of January, FIIs have been again net sellers in the market. And that puts pressure on stocks like HDFC Bank, because HDFC Bank is FII's favorite stock. So every time FIIs become net sellers in the market, HDFC Bank tend to feel pressure on their stock price. So they're currently trading just over 1500. I see absolutely no reason that 22 is going to be the great year for HDFC Bank, and there is absolutely kind of solid chance that they may deliver double-digit growth in their stock price as well. Of course, who knows what the future holds, but looking at the fundamentals, looking at the issues that led to their poor performance, and looking at the constant, continuous FI net selling, chances are that over next 10, 12 months, FIs will be back, the issues are resolved, financial performance continue to be strong. So there is absolutely no reason for us to doubt that HDFC Bank performance going forward, stock performance going forward, but nobody knows what the future will bring. But the logical guess seemed to be that it has to be a positive way forward for HDFC Bank. So this was a simple, I guess, explanation of the quarterly results, and also trying to kind of paint a picture in terms of what you could look forward in terms of HDFC Bank's performance. Given now we are just about to kind of end our video, we would just remind you that if you, having watched this video now, if you feel that the content was good and easy to follow, then please do not forget to press the like button. That's the kind of important input that we need from you to keep going and keep producing the content that you like. If you have any comments on our videos, then also let us know, because it's very important for us to know how you as viewers feel about the content that we are producing. If you think we're doing a good job, then let us know about that. If you've not subscribed our channel A to Z Learning as yet, please do subscribe and become part of our viewers family. So thank you so much for watching our video, and good luck with your investment decisions.